The surging appetite for risk among investors bodes well for the overall stock market, but it is especially favorable for the higher risk stocks. For those willing to embrace this risk, the potential rewards can be substantial. The following equities, which are priced below $5 per share, exemplify this combination of risk and reward, with the potential to double or even triple the initial investment. Given the inherent volatility of these investments, Wall Street analysts recommend conducting some due diligence before making a decision, noting that not all penny stocks are destined for greatness. With this in mind, a search was conducted for compelling investments that are set to boom. Using the TipRanks database, 2 penny stocks were identified that have amassed enough analyst support to earn a consensus rating of strong buy, not to mention each offers massive upside potential. The first is a microcap biotherapeutic firm named Lineage Cell Therapeutics, with the ticker symbol LCTX. This firm is working to create cell therapies that target severe conditions with high unmet medical needs. The company utilizes a proprietary cell-based platform to develop its therapies and can create lines of terminally differentiated human cells capable of supporting or replacing cells that are dysfunctional or absent due to injury or degenerative disease. The company's drug candidates, designed on this platform, assist the natural immune system in putting up an effective defense against a wide range of conditions. Lineage Cell Therapeutics currently has 5 candidates in its research pipeline. 3 of these are in preclinical stages, but the other 2 are undergoing human clinical trials. Of these, the more advanced is Oprigan, an ophthalmological drug being tested in the treatment of dry age-related macular degeneration with geographic atrophy. Lineage Cell Therapeutics is developing this drug in a partnership agreement with a Roche affiliate Genentech, which promises lucrative future royalties. For now, the key developments revolve around upcoming data releases. Study results from the Phase 1 clinical trial, covering 24 months of testing, are set for release at the 2024 Retinal Cell and Gene Therapy Innovation Summit, scheduled for May 3rd. The company's presentation will include long-term follow-up data from 10 out of 12 patients, covering anatomical and functional results. Oprigan is the subject of an ongoing Phase 2 study on the optimization of subretinal surgical delivery. The study will evaluate safety and activity in up to 60 patients and began in March of the previous year. The trial is being run by Roche, and interim data from the study is likely to be Lineage Cell Therapeutics' next major catalyst. Covering Lineage Cell Therapeutics for Baird, analyst Jack Allen is enthusiastic about Oprigan as the company's main draw for investors. He writes of the program's overall prospects, "We continue to believe Oprigan's profile, which features both positive anatomical and functional changes, is differentiated in the geographic atrophy space." For context, neither of the approved geographic atrophy therapies has been shown to improve vision function. Rather, they were primarily approved in studies focused on slowing lesion growth. With an estimated 2.5 million geographic atrophy patients in the developed markets and no approved treatments for this disease, we believe that Roche's annual sales of this asset could easily top $4 billion, which could translate to over $500 million in annual royalties to Lineage Cell Therapeutics, a dynamic that should drive significant upside to Lineage Cell Therapeutics' valuation in the long term. The analyst added, "Moving forward, we remain positive on the potential for Lineage Cell Therapeutics' cell therapy pipeline and anticipate investor appreciation for the Oprigan opportunity will increase in the coming months as additional data are presented." To this end, Allen rates LCTX shares an outperform rating, while his $5 price target shows his confidence in a robust 275% upside potential for the next 12 months. Overall, the strong buy consensus rating is unanimous based on 5 recent positive analyst recommendations. The shares are trading for $1.35 each, and the $5.40 average price target, even more bullish than the Baird view, suggests that a 1-year gain of approximately 303% lies ahead. From biopharmas, we will shift over to medical diagnostics. MDX Health is another microcap firm in the healthcare sector, but rather than focus on treatment options, its work is aimed at early detection. The company is working to commercialize precision diagnostics that provide medical professionals and patients with actionable molecular information needed to create personalized treatment plans. MDX Health does this by utilizing proprietary genomic, epigenetic, and other molecular technologies to develop accurate tests to make diagnoses and prognoses for urologic cancers and other urologic diseases. The company has several diagnostic tests on the market, including 3 focused on prostate cancer and 1 on urinary tract infections. The company's two main products are the Select MDX test for prostate cancer, used pre-biopsy, and the Confirm MDX test for prostate cancer, used post-biopsy. The first is used as a screener for aggressive prostate cancer. It is a urine test proven to be highly predictive, given to men at risk for the disease before initial biopsies are conducted. The second test is given after a negative biopsy and is used to identify patient populations with clinically significant but undetected prostate cancer. This company recently released its financial results for quarter 4 and showed sound revenues and a deeper than anticipated earnings loss. At the top line, the company's quarterly revenue of $19,390,000 was up 50% year over year, and it exceeded the forecast by just under $500,000. At the bottom line, the company's earnings per share of 39 cents missed the forecast by 8 cents per share. We should note here that MDX Health's revenues have been on an upward trend since the beginning of last year. For BTIG analyst Mark Massaro, this stock shows clear potential in a growth field. Massaro writes of the company, MDX Health executed nearly flawlessly operationally in 2023 and announced it is evaluating a number of growth opportunities in the form of new partnerships or possible acquisitions. MDX Health delivered another strong quarter as it drove a quarter 4 revenue beat and reiterated that its 2024 revenue guide is above where we the street were modeling, as they guided for 12% to 15% year-over-year growth. We think there is upside to this guide, and for context, MDX Health drove 89% year-over-year revenue growth in 2023 and 42% year-over-year organically. We view MDX Health as an attractive small-cap growth and value stock and a one-stop shop in prostate diagnostics testing, and trades at just 1.1 times our 2025 revenue estimate of $90 million, below peer historical averages of 3 to 7 times. Looking ahead, Massaro quantifies his stance with a buy rating and an $8 price target that suggests a 221% upside potential on the 1-year horizon. All in all, there are 3 recent analyst reviews of this microcap stock, and they are all positive on giving the shares a unanimous strong buy consensus rating. The stock's $7 average target price and $2.49 trading price together imply a 1-year upside of 181%. And that wraps up this video, so for more videos just like this one, go ahead and annihilate that like button, and I will see you in the next YT video.